The BOJ has done exactly what the market expected it to do, getting rid of YCC, also making exit from negative rates. Let's get insights. Hamza Ayub, portfolio manager at Farro Capital, which has over $1 billion in assets under management. Hamza, your thoughts on the move today?
I think it's basically, in short, we haven't seen any ninja move from BOJ, if I were to sum it up in one word. It's pretty in line with expectations overall, and we are seeing that in yen at this point in time. Overall, we still have to get into the weeds of the overall notes of BOJ as to what are they going to talk about the forward guidance, whether they are going to change the inflation target, and what kind of communication we get from the BOJ. But at this point in time, it's nothing too drastic overall.
You said the easy money has been made. So how do you continue to make money in Japan? How do you play Japan right now?
So what we are doing is, at this point in time, is that if you look at Japanese equities over the last 1 or 2 years, and we look at this drastic upside in Japanese equities, mostly in yen, in dollar terms, they are probably in line with S&P and the rest of the world. And we feel that from here onwards, given the reset that we have already seen in Japanese valuations, and given we are at a point in time where monetary policy will start to normalize in Japan also, overall, the way to make money in Japan is basically going more bottom up. And what we've been doing is, obviously, there's a long-term thematic in Japan, which is corporate governance reforms. Obviously, we continue to play that, where we feel there'll be going to be capital return to shareholders. They're going to be upside. Second is, we do feel that a subset or a first derivative of those corporate governance reforms will be dividends in Japanese equities, which will increase significantly over the next 1 to 2 years. And probably the dividend future market is underpricing that. So that's another way to play it, play through the dividend futures. So that's some of the ways that we are looking at overall. And like I said, that we have seen year to date more than 18% in Japanese equities. Last 1 year in local currency terms, huge returns. We have come to a point that everybody is now very, very positive in Japan. It becomes a consensus trade. But we feel that now is actually the time to start really taking a step back and looking at the bigger picture and going more bottom up.